Hi, welcome to EQUISIS Financial Services. We always appreciate your interest in learning stock trading and analysis. So now in next few minutes we plan to discuss about the interesting concept in technical analysis. It's called gap analysis. Using gaps we can identify the strength of the markets, the strength of the directional movement. Okay, the prices are going up. That we managed to identify using a lot of directional analysis which we have learned so far using Dow theory or price patterns or candlesticks analysis. But I just need to know whether really it has a strength or not. That can be identified, that can be answered using a gap analysis. It means it's very clear that we people have to have some basic knowledge. You people have to understand the how demand and supply functions in market. Then only probably you can make use of this gap analysis. Okay, if you don't have a basic idea, probably you can revisit our complete videos right from day one till this. Then probably you start understanding the gap analysis. These videos are actually made for the people who attended a program, the training program with us, or any of our clients who wants to recall this. So we have just made it. So if you find a bit tough, it's better you learn the basics using the previous video to move forward. Okay, now it's time to move forward. Trade with knowledge and discipline. Okay, the word knowledge and discipline will give you some some money if you probably understand them better. Okay, what is gap analysis? As we said, it is not a directional indicator. Probably it may not say whether it is a positive or negative, but it says is it moving with strength or it's lacking strength. That's what it's actually communicate to us. So it will say that the prices are moving up, but is it because of aggressive buying or just lackluster buying? Or the prices are coming down, it's because of aggressive selling pressure, or is it just because of some profit booking? So just that can be answered using gap analysis. Okay, it helps us to locate the current phase of the trend. We mean, if you identify the gap and if you manage to locate the gap, then probably you can recognize whether you are at the early stage of the trend, or probably you are just broken out, or whether you are actually running away of the trend, or whether you are almost near to the termination of the trend. Probably that can be answered if you know a gap analysis better. And it appears due to the difference of trading range. It's simply because trading range, say today the stock is trading from 10 to 20, next day stock opens at 30 and is closing at the rate of 40. It means 30 to 20, from yesterday and today there is a difference between the prices. That difference is called as gap. We see things in graphical in next slide. What we have to do is, the moment you spot a gap, you have to try to qualify the gap in any of this one. We have 4 types of gap. Try to name it as a area gap if it serves the condition as per area gap. If it is a breakout gap, probably it shows some strength. Runaway gap, which the squeezing is happening. The exhaustion gap, if you manage to name this an exhaustion gap, probably the trend is almost terminated. So first what we have to identify is how to name the gap properly. If you name the gap, almost 90% of the job is done. Then you can easily take a call. First we try to see how area gap generally appears. See, first when you open the charts, okay, using line charts may not show any gap because every dot is getting connected through a line, so you cannot see any gap using line chart. So it is better you use a candlesticks. Okay, now we for a explaining purpose we have a chart. This is a trending, this is a sideways. Okay, now what happens next day? The market is down the 2 different days, and the difference between those 2 different days marked as a gap here. I hope now you people see this gap is between the yesterday's trading range to this today's trading range. So what next need to be done? Next we have to identify the trending from non-trending area. Okay, this is a trending area and this is a non-trending area. It is a sideways. The sideways is happening because of selling pressure as well as buying pressure. This is supply zone, this is demand zone. So now at present stock is currently trading between the demand and supply zone. In that case it communicates this area is belong to both the party, whereas this particular gap is formed because of external or global cues which was in favor of sellers today. But by tomorrow if buying might take place, and that makes the price to go back once again, because now it is currently placed inside the people So we expect this gap to be filled in near term. It means we expect the price to recover and it might fill this in near term. Okay, so any gap appear inside the non-trending area, we will qualify this as a area gap, and this does not have any significance and we expect the gap to be filled. It means we may not have any idea whether who is powerful, all this stuff. But if the area gap is not filled, it communicates one thing: the counterparty is not powerful enough. It means in this case, if this gap is not filled, it is inside the area, this gap is not filled, it means the buyers are not powerful enough to fill this. That's early sign that probably the stock might give a negative breakout. Okay, now we look at the next one, which is called as a breakout gap. Look at the price was moving up, now it started moving down. Now the price opened here. Next day the price was moving out of the range. It's nothing but a breakout. As per Dow theory or even a price patterns, whatever it is, you generate a buy signal here because it is moving out of the range. And it is followed by a good volume also, and there is a gap appeared. This gap appeared while moving out of the range, so we qualify this as a breakout gap. Okay, there is something called a demand zone here, and this is a breakout area, bullish breakout area, and it appeared after a breakout area. So this is a beginning of new trend, and we qualify this gap as a breakout gap. It is because a breakout gap appear during the beginning of new trend or while breaking out. But one thing you have to remember, the volume should be high during the breakout day. Then only it qualifies to be the breakout. Okay, will this gap get filled? That's a big suspect, because this gap should not be filled, because now bulls just taken control over the bears. The buyers become very aggressive. Today they managed to break it with the help of external support, and they managed to clear the sellers ground. It means the sellers may not be in the position to take the price to go down. So as long as this gap is open, we expect the bulls are very powerful. Now we see the next gap, which is called runaway gap. See, the prices are moving up and move sideways. Now this price given a breakout because it is moving out of the range. After giving breakout and while moving forward, one day, because of some global support something, it opened with gap up and climbed upside itself. This is a runaway zone. Why do we call this as runaway? Because before breakout, that this area is actually belongs to the seller. During breakout, seller lost the game. It means they sold, but they could not keep the price under their control. Now they are losing money. How long they can lose money? Because if you are a seller, as the price goes up, the exchange will take money from your packet and they will give it to the buyer's packet. So buyers gaining money, buyers are very comfortable. So beyond a limit, you lose your control, and the moment you start losing money and you are forced to go out of the position, now you have to buy it back. You have to exit your trades. If you are buying it back, probably you are actually closing down your position, but that buyback will create demand that makes this price go up. So runaway is none other than the sellers are running away from this zone. So that's the reason why we call it as a runaway. In this case, who is actually selling the stock? It's not the one who already bought it. There is no sellers, but a lot of people are buying. So although volume may not be high, but the price moves slightly faster in this day, and the price is expected to close at the highest point. That's a sign of runaway. If all this characteristics is present, look at this. This is happening at the trending zone. So we will qualify this as a runaway, and this is called as the strength of buying, and the short people are getting excused when it comes to the runaway. They are just surrendering to us. Okay, as far as the runaway gap is concerned, we don't expect the gap to be filled because there is no selling is expected. As long as runaway gap is open, we can assume that the trend remains strong and is expected to move further. Now we look at this gap analysis, which is once again an interesting gap. Look at the price are forming. we have to identify the gap in price charts. That's the first job. Look at the price are moving up, it's climbing. Oh my god, the stock is opened with a major gap. It means on day opened it witnessed a gap, but it closed the entire gap in the same day. It means this is called as exhaustion gap. So the gap appeared during the day or the day today, but it closed within a day or a next day. It is nothing but an exhaustion. See, the gap is not visible for everybody here. The gap is visible for someone who know the candlesticks properly. Look at this. The stock is actually closed here and next day opened here. It means during open you could see the gap, but end of the day there is no gap because the stock is closed slightly lower here. It means it is because of selling pressure. Why it happened was the price were moving up, the sellers are actually under trouble, the buyers are very confident, but today I got extra thumbs up, there was extra support from the global markets, but now the buyers felt it's a time to book profits. Now the people who bought stock at this level are coming here to selling the stock. Just because of their selling it is moving down. This indicates a major selling pressure. A gap disappeared. That's a sign of exhaustion. So, and especially this happened after a trending. Look at this. This is a demand where started taking place. This is a breakout area. This is called as a trending area, and we qualify this as a runaway. But now this area is called as exhaustion gap. So anything anything which appeared in the day morning and disappeared, and we qualify this as a trend termination. It means this existing trend from this bottom has come to an end. Okay, fine, perfect. So as far as the gap is concerned, we had about a 4 gaps: area gap, runaway gap, breakout gap, exhaustion gap. All 4 has a different meaning. So the area is the below the the before constructing a trend, the area gap is getting constructed, and the breakout gap is very strong, that communicates that the trend will go upside, and we have a runaway gap and exhaustion gap. Exhaustion gap is the early sign that the trend gets terminated. So what next? So probably here is where you probably we are concluding that um, the self diagnosis about the price patterns, like we ourselves applied Dow theory, price patterns, candlesticks analysis. Now here we applied the gap analysis. So this so many ways by which we spent our efforts in understanding the price movements and strength. Now the next job is very easy because the algorithms will make you people to understand the price movement. So we're gonna use the moving average and RSI. It's widely accepted algorithms. The formulas are available. It means we recommend you people do not buy the buy sell tips, because that's you don't understand how it actually functions, and it may not be backed with professional people studies. And if you find this gap analysis interesting, because most of the people find gap analysis interesting, if you find it interesting, if you do find this interesting, you can share this in our portal. This can probably benefit the someone who's interested in learning gap analysis. And if you have any viewpoints with respect to gap analysis, you can post your viewpoints in the below comment box. Okay, thanks for your patience, and happy trading.